To the district now, President Trump is expected to sign a resolution soon banning D.C. from opting out of some tax breaks in the big beautiful bill. But district officials say 38,000 taxpayers and businesses have already filed. So now D.C. leaders are weighing their options. Our Rebecca Turco is live at the Wilson building. Rebecca, can the city take legal action under the Home Rule Act?
Well, that's really a big question here, and district leaders are working to figure all of that out in real time. To sue or not to sue, D.C. officials are mulling over whether to take legal action against Congress over the Senate's final vote on D.C.'s tax code.
The language is quite clear. All I can say at this point is that we are looking at our options.
Council Chairman Phil Mendelson says the 30-day congressional review period to evaluate the law expired the day before the Senate's final vote, but the decision of whether to sue is not being taken lightly.
As Senator Warner said on the floor, it's as if the district has a target on its back. And when you look at it that way, the decision of what our next step is becomes more complicated.
The courts have never weighed in on their interpretation of this 30-day window. So if, for instance, they rule the measure stands, whether Congress met its deadline or not, that sets a tricky legal precedent for home rule advocates.
This might be something that the courts will have to figure out. It's certainly something the DC CFO will figure out in deciding whether to cancel filing season right away or not.
If the president signs off, it means D.C. can't locally opt out of more than a dozen provisions from the big beautiful bill, like no taxes on tips and overtime. Chairman Mendelson says that would mean around $700 million lost in tax revenue over the next few years.
What would be your message to, say, tipped workers who were looking forward to getting, the federal tax break and the local tax break?
Well, I don't want my answer to prompt 2 phone calls to my office, but I haven't heard from a single tipped worker.
Now, the chairman did say there are some tipped workers who do itemize their deductions, but that it's very few. Michelle?
Now, Rebecca, earlier we mentioned thousands of residents have already filed their taxes, but should people who still have this on their to-do list just wait till we learn more?
Well, that's really hard to say as it relates to district residents, because while we're still waiting to hear what's going on with district filings, the IRS deadline is still April 15th to file your federal taxes, and that is a deadline you do not want to miss. Live from the Wilson building, Rebecca Turco, 7 News.
Rebecca, thank you. And since the president still hasn't signed the resolution, tax returns are still being processed in D.C. under current city law. But the district's chief financial officer says filings will at some point likely need to be paused. Then forms and procedures can be updated. The CFO says this pause, once it's initiated, could take months. But bills don't stop during that time, even for the city. So the district could face a $400 million cash flow problem if it can't get income tax revenue. It likely won't see that money until next year. We also heard from that tax expert about what D.C. residents need to consider right now.
We are mid-filing right now, and anyone who has already filed their taxes may have to file again after DC shuts down tax filing and then, issues new forms and new rules to comply with what Congress just did. So, hang on to your refund, especially if you got a child tax credit from DC or an earned income tax credit this year from DC. The federal government might force you to give that back.
And that full interview is on WJLA.com. New York, California, and Illinois were able to successfully decouple from the new federal overtime and tip tax rules. Leaders say they need the added revenue to maintain state programs. Most states have conformed either automatically or through local laws, but Maryland is among a small group that still has not officially committed to adopting the new rules at the state level. A bill was just introduced in the General Assembly to subtract overtime pay from taxable income. A hearing is set for February 26th.